I, Kishore, Suvarna, and my colleague, Mr. Munir, we'd like to present to you the outlook report for Jubilant Foodworks as to how the company looks in 2025 and 2030 rather. Right. So just to give you a brief insight as to why we are bullish on the company or why we like the company so much. So I'll just give you a brief into the company. Now, Jubilant Foodworks is a company that operates Domino's Pizza and Dunkin' Donuts. Domino's Pizza is basically operated by JFL in India and in Sri Lanka and Bangladesh through its subsidiaries. So recently, Jubilant Foods has also entered into the Chinese cuisine segment through its indigenous brand called Hong's Kitchen. Now, Domino's Pizza has a relatively long, a very large network of about 1,335 restaurants that spread across 282 cities. Right. So JFL, that's a short form for Jubilant Foodworks. Is also developing and operating the brand Dunkin' Donuts in restaurants, which it has about 34 restaurants in India across 10 cities. Now the company intends to grow and is increasingly focusing on technology, data, and digital infrastructure to grow its business. We know now the in thing that will be to take over the world, right? Rather in the future would be technology, right? So they are focusing big time and spending a lot of money on digital infrastructure, technology, and data science. That will drive JFL in their food business. Right? Now I'll give you a few words about the management. We've done a bit of research about the management. As you said, the management is very crucial and critical in any company's fortunes. The company's management, the directors, the managing director, the chairman seems to have a very good record, both in terms of business execution and in terms of other activities. Like rather, they have a very clean slate in terms of business, right? So nothing to worry. They've executed almost everything that they've said till date. We've been following the company since long. They've been keeping their commitments in business commitments and whatever they've been saying. So there's every reason to trust them, and no reason not to rather, right? So integrity wise, yes, they are fantastic right now. So I'll just take you to the industry scenario that is there currently. COVID-19 has hit the restaurant industry and it's hit them very hard in the current times. There are huge cash crunches. Restaurants are closing down. The consumer confidence has dropped. The dining facilities have been curtailed because of the lockdown and all this kind of stuff. Yeah. So yes, a lot of challenges that are going on currently. But all this is set to change, especially in India, because we have a very young population that has a taste and preference to pizza, to pizza culture that we call. We are moving very fast, and the addressable market there is very huge because of the increasing population or the younger population that we have. Right. The same statistics hold in other countries like Sri Lanka and Bangladesh. They also have a relatively young population, and hence Jubilant Foods is focused towards these countries as well. Because again, the per capita income, as in India, is growing in these countries as well, and the discretionary spends in terms of food or ready to dine food is going to go up. So hence their focus there. So yeah, and another thing that's come up in this COVID-19 times is hygiene, where the customer will focus too much on hygiene. The relatively older restaurants, around the street kind of shops that were there probably might face a bit of an issue because of the current hygiene factor that's come into mind given COVID-19. So that will augur very well for Jubilant Foods, and they are taking every and utmost care. Even the advertisements you must have seen that they are focusing too much on hygiene. So that will give them a very big edge over its competition and other food industries, right? So a lot of population that is currently eating in places where hygiene probably was not maintained would now move towards Jubilant Foods because of the hygiene factor. So that augurs well for Jubilant. Now there's also a risk factor that we found that could be an issue wherein Jubilant Foods is concerned, is they are highly dependent on lease agreements, and fluctuations in terms of lease agreements can affect their margin by quite a bit. So that is one thing that we'll have to look out for. Yeah. So I'll take the current scenario, what's happening right now. Now the industry as such is facing huge problems because of the COVID, as we just discussed. But Jubilant Foods stands as a ray of hope and they are able to navigate, as we've seen. When everything was closed down, but yet Jubilant Foods was able to keep the delivery on. Smaller, little, to a small extent, to a big extent, doesn't matter. What is important that they were still able to execute and keep their stores running to whatever extent they could. They did better or the best amongst their competition as of now currently. That speaks a lot about the management, right? Obviously, as expected, the revenue fell by around 59% compared to the Q1 of last year. Last year, the Q1 was around 949 crores, and this year it's about 388 crores. Expected, nothing to worry about. The profits obviously as well about 200 odd percent. Even in this current scenario, the good thing was the company was able to survive without any debt. The competition kept on raising debt. They would require a lot of working capital given the current scenario, but Jubilant Foods currently doesn't seem to require any kind of debt. They are able to manage with their current inflows. That is there. That holds very good and again speaks very highly of the management. Now, a good management is one that keeps on tuning its operations, right? So this is one very important thing. When the company decided to shut down 105 stores where they were, which is mainly to malls and tech parks, and they can't see any immediate revenues in the future coming in, so they decided to close 105 stores there, and we agree with them wherein that is concerned. Also, now they've replaced this 105 stores by promising to open another 100 stores this year, which they see an immediate revenue growth in the coming year and the coming next 5 to 10 years. That's there. We believe that the company, if they've guided us to opening 100 stores, they will, because till now they have always delivered what they've spoken about. So every reason to believe that they will deliver their 100 stores this year. Now, the company is also expecting an increased demand in online order and takeaway sales, apart from which would reduce, which would actually be a reason because of the in-time services going down, right? So a lot of people, what essentially we mean to say, or the company needs to say, is basically people going to restaurants will be much more lesser given the current situation. And a lot of people would be ordering. The number of people ordering sitting at home would increase significantly. Correct, as you've seen that happening in the current scenario as well. Now, the company is also seeing a boost in demand of the customers, wherein a lot of customers are closed in between and finding it difficult to come up. Now, those customers loyal to those brands or those particular restaurants are moving to Jubilant Foods. That is auguring well for the company. Apart from this, in these times, the company has moved to a new vertical of ready-to-cook food with the brand name Chef Boss. And they also have launched a new beverage under the same name. Rather, the name is Prestige. Now, the thought process behind this is as we are moving towards nuclear families, there's little time for both the couples generally go to work, and there's hardly any time to cook. They require more time for themselves, and hence the concept of ready-to-cook food will storm the market in a big way. And they are positioning themselves pretty early in this market. There's a lot of scope in this market for revenues to grow, because there are very few players in this segment, and they aren't really established. Jubilant, given its brand name and given the backing that they have, we believe that they will be able to cement their place into ready-to-cook business, and the business opportunity looks good for a good 10-15 years now. Another important significant thing that needs to be highlighted in terms of companies is they are moving from they are taking another ambitious goal of moving from 30 minutes delivery to 20 minutes delivery. Now the customer wants faster service on the table, and we believe this will have a significant positive impact on their revenues and the profitability. So that's very important to keep in mind. So just taking the last year's numbers that were there, the EBITDA grew by around 22% last year. Their operating revenue grew by around 10%. Their like-for-like sales growth grew by about 4.5%, and similar same store growth grew by around 3%. They've opened about 130 restaurants last year, out of which 123 were Domino's pieces, and we were Now, another important thing that we need to look in, or we need to give emphasis on, which even the company emphasizes, they are trying to improvise on their app that is there, and their online ordering has improved from 79% last year to 86% last year, which is going to be a big beneficiary. This is one thing that will grow their revenues also. Yeah. So what do we see in the long term for this business? Yeah, we see that this business has a lot of top of the mind recall. The first pizza that comes to your mind is the Domino's pizza. It has a strong brand presence. The online presence is really really good. As I've told you earlier that they are putting a lot of money and a lot of efforts into online ordering apps, app improvements, and going from the 30-minute to 20-minute delivery variant. uh, so the focus clearly is on the young population, and as we see, our country is very young. Similar to our neighboring countries where they have young population. It's Sri Lanka, India, Sri Lanka, Nepal, and Bangladesh, where they're focusing. Where we have relatively young population, and they cater or fit into this young population's problem solving thing very efficiently. Then now one of the problems that they have that we discussed earlier was with the nuclear families and both couples working. They want quick food, right? No one has time to come home and quick food. So they are focusing on their app delivery services. Whether they come on their way home, they can just order from the app, and their food is ready by the time they come home, right? Uh, so that is where they're focusing on. The 30-minute to 20-minute is one thing that they're focused on. Now the young population is there, and as the young population keeps on growing, the per capita income keeps on growing, right? So we've always seen in the past, or past history will tell you that the per capita income, a lot of the per capita income, as they grow, gets spent into eating outside, right, or outside food. So that augurs very well for Jubilant management. Now with their committed management, and the industry growing, we believe the management is very well poised and efficient enough to take care of all these opportunities, grab these opportunities with both hands. We could see the revenue growing from about 13 to 18% CAGR, and that's very useful for the business. We should be looking at that very efficient with eyes open, right? So for the further analysis, I'll hand it over to my colleague, Mr. Munir. Munir, you can take it over from here.
Thank you, Kishore uncle. That was a great qualitative analysis of the company. We analyzed what is the quality of management and everything. But now coming to the numbers, because in the end we want to look at the numbers. So for the year financial year 2020, their sales was around 4,000 crore, and what we have seen is, like, in the past 15 years we have seen the constant growth of sales from this company. And for the 5 years and 10 years and 15 years predictions that we are expecting from this company is that we expect it to cross 8,000 crore revenue by 2025. By 2030 we are seeing it to go to around 16,000 crore plus revenue, and by 2035 32,000 plus crore revenues from the company. uh, Coming to the profits, because revenues later on convert to profits, we have seen that profits have been more volatile than the revenues, but we believe that with the growth in the revenues, we expect the profits to grow with that. And for the profits, our expectations are for the 2025 more than 680 crore profit, for the 2030 more than 17,000, and for the 2035 more than 4,200 crores in profits. Considering the above projections of our revenue and profits, we believe that this is a good candidate stock for our long-term wealth creation portfolios. We also believe by 2025, Jubilant Food should have the price target of 4,500 around, and for 2030 around 11,278, and for the year 2035 we are expecting it to cross around 28,000 rupees, plus a lot of dividends from a growing company, hence a wealth creator company according to us. Some important charts before we proceed. These are, say, where do the costs, what are the major costs, so that we know what affects the company the most. The cost of materials consumed is the main cost for them, because the amount of ingredients they use for the pizza or making of the pizza is one of their major cost. The another which we see here is the finance cost, which is not about the interest, but here it is mostly lease. And as earlier explained by Kishore uncle, that lease is something which could affect their profitability a lot. And for the past few years, we have seen that the management is handling the lease costs very judiciously and properly. So we believe that management will continue to do so. Um, Moving on to shareholding pattern. So let us know, like, who is holding this company, who is owning this company currently. So for the Q1 this year, which is June 2020, we have the data as promoter is holding around 42.2% of the total company. The interesting thing here is that there are institutional investors, including many FIIs, DIIs, or say mutual funds, who hold around more than 52.2% of the company. And as usual, there are very few retail investors who are interested in this company for long term, and we have seen just 5.6% retail holding. It shows like the amount of holding that promoter and institutional investors has. It seems like retailers have just a little left for them. uh, Another good point to consider is there are where is the revenue coming for this company, Jubilant Food? So we decided to draw a pie chart for that, and we found that Domino's India is contributing to 96% of all their revenues, and barely some amount of revenues from Dunkin' Donut and Domino's Sri Lanka. Domino's Bangladesh and Hong's Kitchen are so negligible that they aren't even denoted on this graph. Uh, Moving on from the whole fundamental analysis and coming to technical charts, we see that it is making almost new all-time high these days. But according to us, any price near 1600 to 1300 is a good range to buy. And we have seen the price grow in past few years, and we believe this will keep on growing because this is a really good wealth creating stock. Some disclosures, this is just for educational purposes, and please do not buy or sell your shares or any instruments without consulting your financial and investment advisors. I will also introduce Kishore Uncle because he has finished NISM Research Analyst exam. He has more than 20 years experience in the whole field on a general note, and he has also applied for registered SEBI registered research analyst now, and we expect that to come soon.
Munir, we need to make a mention of Munir as well. He's been very humble in not mentioning himself, but he himself is a research analyst. And it's just that the age criteria of SEBI doesn't allow him to apply for license. But yeah, you can consider this work done by both of us. Fantastic work, Munir. Thank you so much. And we hope that you guys have will get a lot of insights into the company through the research report that we made. In case you want any kind of other information, feel free to call us, or you can message us, both Munir or me, at any point in time. Yeah. Thank you so much. Thank you, Munir.